2008, Fed slashes rates to zero. Silicon Valley soars. Detroit dies. 2020, QE floods markets. Tesla rockets 20x. Main Street shutters forever. Coincidence? Central banks don't just set rates, they pick winners and losers. Why now? 2025 rate wars rage. Fed, ECB, BOJ pump $10 trillion since COVID. Stock markets hit records, yet wages stagnate, small firms collapse. Your 401k thanks them, your neighbor's business doesn't. Follow the mechanism. Step 1. Crisis hits. Central bank announces emergency action. Rates crash. QE ignites, buying bonds, flooding banks with cash. Step 2. That cash doesn't spread evenly. Big banks get it first, trillions at zero cost. Small banks, crumbs. They lend to startups, local shops. Big banks chase big gain. Step 3. Cheap money hunts yield. It flows to assets, stocks, real estate, tech unicorns. Your uncle's hardware store? No IPO, no venture capital, starves. Now the selection. Big tech thrives on low rates. Amazon borrows billions cheap, crushes competitors. Green energy gets subsidies plus cheap debt. Tesla's $500 million Fed-backed loans in 2020, now market cap $1 trillion. Coal miners? Bankrupt. Here's the math. Post-2008 QE, $8 trillion injected. S&P 500 up 500%. NASDAQ 800%. But median home price doubled. Rents up 50%. Small business failures hit 30-year highs. Fed study admits QE boosted stocks 20 to 30%. Little wage trickle-down. Raise stakes. Who decides flow? FOMC meetings, 12 people. Ex-bankers, Goldman Sachs vets. Minutes reveal bias. Support financial markets. Translation: Wall Street first. Public line: saving the economy. Reality: saving the system. 2020, Airlines got $50 billion bailouts. Small restaurants: PPP loans capped at $10 million, riddled with fraud. Big box stores stayed open. Mom and pop deemed non-essential. Irony stings. Powell lectures inflation transitory. Meanwhile, his policies minted 700 new billionaires since 2020. Forbes confirms. Small firms, 200,000 vanished permanently. Zoom out. Global pattern. ECB funnels $4 trillion to EU banks. German autos recover. Greek islands rot. BOJ owns 50% of Japanese stocks, protects Toyota, crushes retail. Incentives lock in. Revolving door spins. Fed chairs to Citadel, Treasury secretaries to JP Morgan. Conflicts? Waivers filed quietly. Long-term fracture. Wealth gap explodes. Top 1% owns 54% of stocks. Bottom 50% owns 1%. Social trust erodes. Populism surges. France riots. Truckers block highways. Absurdity peaks. 2022 rate hikes punish everyone. Stocks dip 20%, but whales buy the dip with inside knowledge. Retail chases ATHs into bear traps. Bigger risk, moral hazard festers. Banks take bigger swings, no bailouts await. LTCM 1998, too big to fail doctrine born, repeats eternally. Final reveal, central banks claim neutrality, data disagrees. Asset owners win, everyone else funds the game.